I hope that you will make better after this. And this is about our vision.
Forget our work.
Think about how it could be. A new mindset has arrived, where to share has become our greatest power.
It is this energy that guides us, will enlighten us, where meaning and purpose is applying.
Burn inside every soul on the planet.
Welcome to the human-to-human model, uniting and inspiring leaders globally
To build together with meaningfulness and joy.
Opening new possibilities for people.
Anticipating disruption. Rethinking society.
who will reach their potential
Because the future is today. Join us to be a sustainable plus 100 world.
I think right now is clearly the way to act. Lack of clean energy will affect the Earth's core later.
I find that when people begin making small changes, they gradually get bigger because they get this feeling, I am doing something.
So we moved from greed-based civilization to human value-based civilization. Making money is a happiness. Making other people happy is a super happiness.
Wondering about your future? So bring your DNA to us today.
And so in our the whole vision, we believe that we will change completely the world's paradigm by 2030. Yes, and in order to do that, we need to scale up from billions to trillions, and then we need, of course, to work with the new creative technologies and also with creative people and with startups. Yes, because the second wave of the disruption will be driven by the disruptive technologies and disruptive companies.
Solar Business Club leaders gathered in Dubai with the leaders of financial and investor communities, but also political decision makers to explore opportunities related to exponential growth of solar, battery storage, electric vehicles, hydrogen, smart energy, and other clean technologies.
Right now, you need to party. Make yourself rise up and walk away from things that's keeping you down. Yeah, you need to party till the sun rise up. Another day for you to change things around. Every day of sunshine.
During the next months, we will unite over 1,200 leaders on all continents to reinforce human-to-human relationship and work hand in hand on financial instruments and business models to scale up clean tech investments from billions to trillions while shaping the future today.
Every day of sunshine, sunshine, sunshine. Every day of every day of every day of
And we will make it by combining business with meaningfulness and joy. Thumbs up for solar.
You deserve attention when you walk into the.
So I think that yesterday you could notice that we had 50th Earth Day, yes? And since 1 month or even more, we experience difficult situation, disruptive situation around the world. And what we understood that, especially in such moments of disruption, negative disruption, it's so important to unite forces and to work together. And even if you have the best vision, we need to work closely with the financial community, but also with startups, yes? And that's why we, within the club, are working on the initiative of Clean Tech Business Startup Hub, which will be based in France. Yes, Anit?
Yeah, good.
You can see it's very nice weather there and a very nice environment. And really the goal is to bring to our members the priority access to disruptive technologies and business models. and combining competences, yes, of investors, startups, experts, our members, yes. And what I believe that what is also needed, it's to have like a global hub of startups, yes, but let's discuss later about this. Because these are the actors that we identified, and we believe that with our expertise, with our members, and also with this, you know, you could notice that even we are from the industry, but we have the spirit, young spirit, and also very positive spirit, yes, innovative spirit. So I think that we can help you to combine all these competences. And then why France? And why Ines? Ines. Anis. So you can see this was our kickoff meeting. So I think that if we make our headquarters there, so nobody will be regretting to come up for our events, yes. And hopefully we can meet not only online, but we'll be meeting often there. So still, I'm not sure if Jigar arrived. I don't think so yet. Let's see, but I think that we can already start, and if he's joining us, then it will be also great. If not, he will join us the next time. Yes. So as you could see in our presentation, so for us it's very important always to start the dialogue. Yes, because without a dialogue we cannot exchange ideas. And then what is also interesting with us that we always take action. Yes, and maybe I will give a floor to Anis, who is a chair of this event, but also is a chair within the club of Cleantech Disruption chapter, in charge of Cleantech Business Startup Hub. So Anis, I'll give you the floor. And then we will make a short round of presentation of participants.
Okay, good. So maybe we start with a short presentation for each of us, and then after you can give me back the floor. So my name is Anis Jouini. I'm heading National Institute of Solar Energy in France. Thomas have shown some nice photo of our institute. And when it comes to the Cleantech Business Club, we are really pushing a lot how to gather together different community from innovation, industry, and the financial world, just to work together and for one target. So I think I can hand it over to maybe Alain to introduce yourself, and then Caroline and the others, and then after I'll be back to comment.
Sure. Nice to meet you, everybody. My name is Alain Tonetti. I'm CEO and founder at Taudast. Taudast is the first company in the world that brings the blockchain to whatever kind of enterprises and help companies in using the blockchain to raise money, create investments for their customers, and have a solid base everywhere in the world. I've been joining the Cleantech Business Club last January in Abu Dhabi. I enjoyed it, and I'm glad to be part of this amazing group.
Starlet?
Yeah. Okay. Hi, everyone. Thanks for being here today. So I'm Caroline de Forêt. I'm a founder and CEO of Steadison. Steadison is a 7-year-old company that is based on Le Bourget du Lac in the French Alps, and is a spin-off of CEA Ines. So thanks, Anis, for making me be here. And we are doing solar power production forecast. Solar power forecast. It's okay. The goal of our company is to have a better penetration of solar into the energy mix everywhere in the world.
Thank you, Caroline. Starlen, it's yours.
Thank you, Anis.
I hope that because we didn't start with our female representatives first, and yesterday we had empowering women.
My fault. Sorry.
No, both of us.
But I hope Starlen, she knows that for our club, the empowering women initiative is very important, so she will excuse us. Yes, Caroline.
Thomas, Carolyn, and I both know that you just saved the best for last. Huh?
Yes, exactly. And thank you so much.
Yes, so I'm the co-founder of Green Earth, which is a new venture fund that we're starting in India to invest in climate and clean tech companies as well as an innovation firm. And essentially, we're using this platform to build networks and create virtuous cycles between business opportunities and funding. In addition, I'm the founder of Clean Tech Women's Innovation Network, which is a pan-India network of women innovators, policymakers, financiers, and ecosystem developers. And I'm also the climate editor for Business India Publications, which is India's second largest business publication line.
And also, I would like to add that we had amazing meeting in India. It was our first actually event for empowering women initiative. And thank you so much for joining us. You know, it was a couple of months ago and also yesterday. Yes, so you are now very happy.
It's great to be part of the club.
Good.
For sure.
So then, thank you, Thomas. Thank you, all of you being here. And I think I will just a few words about the event. Thomas introduced it quickly. I would say this e-convention, it's a new start. It's really very disruptive. And I would say in the energy world and when it comes to conferences, communication, there will be before that and after this event, because it shows how easy to connect the whole world using, also thanks to all those digital tools that we are using and putting this together. And of course, this is really due to real nice people working together and having Thomas and Aiki and the strong team behind doing this and not counting their hours. They are really working very, very hard, and the result is here. And thank you very much for that. When it comes to our session, the idea came up after several discussions with many people, and a lot of them with Thomas. And we said, what we can do special with all the members in Clean Tech Business Club, which was Solar Business Club at the time. And the idea was just to gather together people from different worlds, people from innovation, people running startups who they have really hard life because they need data and they need data immediately, they need results and they need the success. And for this, they need a very innovative, I would say, technology. And at the same time, they are using a lot or spending a lot of effort to raise money from the other side. And of course, there is a second pillar, which is industry. While we are doing this, that this startup will grow up and become a leader in the field or become among the leaders with a new idea to bring it a little bit bigger and bigger. And we have a lot of industrial partners. And then on the other side, we have the financial world. When we look to each of them, they are working for the same target, but the gap between both of them or all of them is very huge. We don't, the people from technology, they don't even barely talk the same language like the financial ones. Of course, everybody is special in his own domain, but what you want here, when it comes to energy, that to put all this together using Ines as a hub for this clean tech startup hub, that really we can really join forces. We can really put in place good practices, and of course in an open mode. Of course, people sometimes they are scared when we are talking about open. Oh, I'm not protected anymore. I'm coming from my mother company, CA, few hundred of patents per year, and trust me, innovation can be open and protected at the same time. No doubt about this. The other thing which is asked for innovation is people, when they want to finance it, they need to see things. They need to touch things. It's a little bit tough when it comes to the energy world compared to digital worlds. When I see people around me, they are trying to raise money for some subject around energy, is much difficult than people working on digital worlds. So for this, we were also pushing ourselves from innovation to try to work on this early prototyping, which means combine our innovation with an early prototype. And on the other side, there is people who are pushing a little bit harder, going further, asking us, could you do something to de-risk the technology? When it comes to a module, to an inverter, we place it in a real condition, we test it, we show the data, we publish. And this is the way how it's working today with a lot of institutes worldwide and a lot of research and development organisms. Behind this, when it comes to energy, and last time I used the word transition, Thomas said, hey, wait, it's not transition, it's transformation. This transformation is happening very, very quick. And of course, when we go to make it quick and to bring this innovation to the market, then the normal way to go is an industrial partner who take it, or we go through startup company. And then a startup company, it's facing a lot of challenges. We will hear a little bit, Caroline and the team, and they are running behind time. And for this, what we want over this discussion, that to think about how really we can combine those worlds together. And if we are pushing that we get something, a kind of a headquarter based at Ines for that, what will be the main challenges coming for the next month that really we can end 2020 by a clear mode and a clear, I would say, startup basic things to start this transformation and to help whether old startups or new ones or the coming ones to go and to make it happen very quickly. So as an introduction, as a chair, I would really highlight this. If we end our session after 1 hour and 15 minutes answering those things, this will be perfect. And of course, when you have when we'll have the floor, then everybody can introduce his company, showing what they are doing, because it's we see a different view, and this is which is important behind.
Well, Jigar wrote me on LinkedIn. I think he doesn't receive emails. I don't know.
Oh. So Thomas, you can forward him the email, or
I just sent him. Let me check. Ah, Jigar, yeah, I'm here. Okay, so Jigar is here also. 1 second.
Ah, good. So I think if Jigar is here, then yes, maybe
just 1 second. We need to, because it's a bit complicated. Okay, let me check the list of participants. Here is hand. But you see, I always say there is always solution, never problem.
Yeah, of course. So maybe we'll correct our mistake, and then we give the floor to ladies first, that Jigar can listen a little bit what we are talking about, and then he can prepare himself for the next contribution. Let me start with the starter. Hi, Jigar.
Hello.
But you see, Jigar there is always solution, yeah.
So, Jigar, glad to have you with us, and I will summarize in a few seconds my introduction. It's our idea here is to think how really we can make the three worlds together when it comes to innovation and startups with industry and the financial world, and gathering people with Clean Tech Business Club around this, that really they can work together towards one target in order to make life easier for people who are pushing startups in the field of energy, and especially in the field of clean energy, which is knowing, I will not repeat. Thomas make a nice introduction with 2 videos, going from billion to trillion, going from gigawatt to terawatt era, and almost whenever it comes to solar, batteries, hydrogen, the growth is almost same, it's exponential, and it's going very fast. So I will hand the floor to Starlet, and then after we come back to you, Jigar, okay?
All right, thank you. Thank you, Alex. So just to speak to some of the points that you raised in your introduction, I think that when we think about combining the world of climate innovation or clean tech with finance and business, really one of the key things that we have to focus on is risk. Really, when we think about investment, on the equity side, it's a balance between looking at opportunity and risk. And on the debt side, it's really a calculation of how much risk is there and how much of it, how much collateral there is to mitigate that risk. And when we look at the business side, and we look at businesses who are contemplating working with startups, the question is, it's not the same as when we look at a digital technology or an internet technology, where if the app has a problem or the website has a problem, it can be fixed relatively quickly. A lot of times climate and clean tech is hardware, and that means if there's a problem, it's a much bigger problem. So the idea and concept of risk and de-risking is, I think, really critical to how we conceptualize business models in the climate and clean tech space. And along those lines, when we think about how to build these businesses, it's really important to start thinking about positive unit economics early, start thinking about how to build a business longer term that is going to be sustainable early on. And I think that when we think about working for global sustainability, it's important to think about building sustainable businesses.
Anis, you are mute.
Yeah. But I would start, I completely agree with you. There is this part of when this is the only word that you hear from our financial colleagues. It's what's the part of the risk, how you can de-risk this. And of course, from the other side, we are pushing heavily to get this this solar industry, this clean industry, sustainable. And sustainability, I would say it's coming slowly, but still we are not there, because there is a lot of progress which is still coming with it. So if I can, Starlen, you talked a little bit about the digital world, and a lot of people, they are guessing and they are predicting with a vision that solar of tomorrow will be digital. And we are seeing this today. Of course, when you are combining multi-physical systems, two different, I would say, type of module with different type of inverter, combining this with a special network, of course, a human being cannot answer there. And it's going directly to software management, to energy management system. And we are seeing that, especially for solar, wind, and all clean energy, it's going very fast and getting linked to the digital world. So do you think that this part, linking this energy to the digital world, can help a little bit for this tough relationship with the financial world?
So I think that there's a shift that's happening in the financing world already, particularly given some of the failed IPOs and some of the questions that have been raised around companies that had massive fundings and became unicorns. And there's been a piece put out by the Kauffman Institute quite recently talking about the need for camels and instead of unicorns, and how camels are these real life animals that can survive during hard times. And I think that that's the type of business that we see a lot in the climate and clean tech space. I think when we think about digital technologies and smart grid solutions and so forth, unfortunately, I think that there is a scalability to these businesses that's different and perhaps advantageous. And I think the business opportunity is really huge, which can allay some of the challenges with the financing world. But I think the other piece that comes in is those technologies in many cases are interacting with grid systems right now. And so if the technology fails, if the software has a slip, if it's interacting with the grid, it can be a much bigger problem. If we have a forecasting solution or a renewable integration solution that malfunctions, the grid can go down, and that's a much bigger challenge than if Facebook has a blip for a day. So there is a different parameter, but it's not to say that the businesses aren't valuable and that they're not great. And it also isn't to say that there's not capital available. As we start looking at the global markets, there's more and more capital becoming available. And I think there's just really a need to start looking at the language, as you said, that we're using in how we're communicating businesses, how we're thinking about risk, how we're presenting business models. And if we're using the same tools and technologies and views around business and really assessing businesses in the same way, or in a way that's specific to them that can make them less risky.
Thank you very much. Maybe I will move a little bit to Jigar. Jigar, a lot of people knows you, and I will appreciate if you can also introduce yourself for the other who don't know you. And my first question will be, of course, you can introduce your activity, and then afterwards, if you look carefully to this energy world, which is really very rich in terms of startup creation, and it's a kind of daily basis. There is a lot of different and new concept and new idea pushed worldwide. From your point of view, which top 3 points that you are looking on those new startups to be confident on it and to put money on that?
Thank you for having me.
Thank you.
So currently, Generate Capital is one of the largest investors, I would say, in projects outside of the mainstream. So we finance fuel cells and electric vehicle buses and behind the meter battery storage, anaerobic digesters, a lot of the parts of the climate solutions world that are not solar and wind. So we have a lot of experience with many of these entrepreneurs, and we're working with about 600 or so per year to figure out how to help them get project finance. We recently closed $1 billion of new capital late last year. I think I would say a few points going into this COVID crisis, right? I think one is that this is going to get much worse, I think, than people really imagine, right? So I think that there's a level of humility that people have to have around the economy. And, as opposed to the 2008 financial crisis, where I think people thought, we're just going to provide stimulus and everything's going to come back. I mean, here, something like the aviation industry will take 2.5 years to come back, probably, right? Many of the largest sporting events and restaurants and that kind of stuff will take 2-3 years to come back, right? Who wants to be in a stadium with 2,000 other people for the next 2 years until the vaccine is fully, implemented around the world? And if this turns out to be like the flu, then the vaccine won't be helpful. People will just keep getting new vaccines every year, right? So I think that there's some level of humility that people have to realize. If you're a startup and you're going to a funder, and you really don't have a clear understanding of the macro economy, then the funder is going to be unlikely to fund you, because things are not the same as they were 3 months ago, right? So your presentation cannot be the same as it was 3 months ago. On the other hand, there is a lot of appetite for infrastructure investment, right? So basically, in the US at least, we, I think, have lost 20% of our entire economy for many years, right? And so 20% of an economy is a depression, which means the US is in a depression, not a recession, but a depression. When you have that, you have to fill the gap with infrastructure. So in places like Saudi Arabia, they've been talking about solar for a long time. Maybe they'll finally build all the solar that they've been talking about building, right? Same thing's true in the US. The US has been getting a D- for its infrastructure for the past 10 years from the American Society of Civil Engineers. Maybe we'll finally fix our airports, fix our roads, fix our bridges. And so now the question becomes, how do you do that in a way that's green, right? How do you use low carbon cement? How do you figure out a way to use electric tugs instead of diesel or gasoline powered tugs, right? All of these things are areas where entrepreneurs can be successful, right? But I think the notion that an entrepreneur comes to me and says, I have a brand new, bacteria, it eats, waste, it turns it into jet fuel. Those ideas will not have a lot of places to go for the next 2-3 years. Anybody who has brand new technology, brand new stuff, I think unless you have a government research contract, there's not a lot of appetite for private investors to invest in that right now. I think it's mostly going to be a lot of these mature technologies. You've seen a lot of green cement, you've seen a lot of recycling technologies, a lot of things that have been in various pilot phases, which are now ready for extreme scale up. Those are the ideas that people are looking for. And so if you're not in that area now, you should transition yourself into one of those areas.
Jigar, thank you very much for your highlight. I would really definitely thought the opposite, you know. I would say that because we are seeing a lot of countries, especially in Europe, they are putting a massive amount of money for this new restart, and which is a clear focus existing industry. I would, from my point of view, personal point of view, I would thought it's if your new project is related to health and to vaccine and such kind of things, you will get a lot of money. If it's for energy, maybe you'll wait a little bit. So from your point of view, if I understand you well, that for this restart program, I would say project related to clean energy or others who taking care about eco-conception and all this will be really on the top of the list after this period, after this COVID-19 period, right?
At the end of the year, not now. It's not on the top of the list now. Right now, it's vaccines and healthcare. But I think that people will really start to recognize how deep and long this depression will be. And they'll start thinking about large infrastructure investments at the end of the year. And so my point is that the technologies they're going to be funding, though, are not brand new technologies that have just come out of the lab. There'll be technologies that have already been listed by the International Energy Agency in their list of technologies that can decarbonize, right? It'll be listed in the deep decarbonization pathways in ARENA's reports, right? Things that have institutional support. For instance, there are some newer technologies that have institutional support, like green hydrogen, for instance, has a lot of institutional support, or some of these other type of waste to value type approaches. But I think that something that's completely brand new, that is a new process, which will take 8 years to get to market. I mean, there'll be very little appetite for that in this current phase. It'll be largely a stimulus-related deployment approach, I would say, towards the end of the year.
May I ask you a question, Jigar?
Yeah.
Do you think that the answer would be the same if we talk about 1,000 or 100,000 of retail investors instead of one big private investors? I mean, let's say you have the opportunity, legal and through technology, to raise money from 10,000 micro retail investors. Do you think that the people would be kind on that? Because I think, I would say, let's say we are talking about these poor people and they have $100 or $1,000 or $5,000 they can invest. They are willing to lose it, maybe to have massive gains instead of putting $1,000 in something that can give you, I don't know, 2%, 5%, 10% in a year.
Maybe, but I think, remember what we're heading into, right? The World Food Program is basically saying that the number of people that will be dying of starvation this year will be 3 times higher than last year. That they physically don't have enough food to go to many of these countries to feed people, right? That, like, in general, 20% of the US workforce is being asked to live on unemployment insurance, right? With no jobs in sight for at least a year, right? And so my sense is that a lot of people are going to get very conservative, that they're not going to be investing in a startup. Even if it's a micro startup of $100 or $1,000, right? I mean, I just think that, and also those numbers are not even like relevant to the perspective of this time period, right? You're talking about a place where governments and others are going to say, we are literally going to put in 5 times more money into the system than we did in 2008, right? 5 times more money will be invested in clean infrastructure this time than China, the US, Europe, others did in 2008, right? I just think if you're an entrepreneur, you want a piece of that money, not a piece of 500 or 1,000 people giving you $500.
Okay. Yeah, but on the other side, if I don't have a big company and I have an idea which is cool, which has a prototype, which needs, I don't know, 20 million, maybe I am able to raise money through the micro or the retail investors.
I mean, obviously, I'd love to hear the other panelists' ideas on this, but my sense is that the state of this recession is much, much bigger, right? We're going to have another peak in COVID deaths sometime this winter, right? And so I don't know if people are going to shelter in place again, right? I mean, something on the order of 30% of the US population might not leave their homes for the rest of the year because they're immunocompromised. They have severe heart issues or they have other sort of illnesses. And so they feel so worried about leaving their house that even when the governors release the shelter in place, they're still going to stay in their house. I just think that if you have a rich uncle and that rich uncle is willing to give you a lot of money for your ideas, that's great. But I just think that going into this next phase with the same level of confidence that you can raise this kind of money from individual investors as you had 2 months ago is not proven.
Yeah, we agreed on this.
Alan, I will really ask you to continue with this because and maybe Caroline a little bit after, because she's also running a startup company and she wants to talk to many investors, and then at the end one of the solutions that she found was with crowdfunding. So
yeah.
But before that, maybe Anis, we just have with us the chair of the whole e-convention, Professor Weber. Yes, Ike. Yes, if you can say hello to all the people, yes.
Hello.
So, yeah, I had one comment just before we hand this to Alan. I had one comment. There is one person who shoot me an email, very long email, saying that all those e-convention sessions are really, there is a lot of positive people behind it, especially the German guy, and they are talking about Ike. So, hi, welcome, Ike. Alan, please go.
Yeah, I just wanted to, I need to go back a few months to explain my thoughts. I'm running a company in the blockchain industry, so I'm not an expert on the clean tech or solar business, but the goal of my company was to give an instrument to small and medium enterprises who are not able to raise money from private and big institutional investors to raise money for their goals and their dreams at the beginning, but with a solid business plan, with everything in place from the retail investor. That's why I asked the question to Jigar. And through the blockchain, we found a way to put the crowdfunding, to give the instrument of the crowdfunding to all kinds of companies. That means that if you have a good idea, but no institutional investor is gonna listen to you, you can go to retail and offer them a piece of the cake, from $20 to whatever the amount you want to sell or to share, I would say. The equity, so in 2015, the equity crowdfunding was born. Equity crowdfunding is something easy. Think about get listing in a stock exchange, but instead of going for big money, you go for small money from retail investors. The problem of equity crowdfunding is that you as an investor go and purchase, I don't know, if I purchase 1% of Anis company, I am not able to exit from the investment. My investment is not liquid. My capital is at risk, even if the company succeeds. But with the blockchain and with the digital representation of the shares or the financial instrument, I am able to enter an investment I missed or exit an investment I made whenever I want. So I did a lot of research, about 2 years of it, and we found a complete legal framework to give this kind of instrument to all kinds of companies. I would say almost everywhere in the world, because some countries like USA, for instance, has certain jurisdiction that are not applicable outside from it. But apart from China, USA, Iran, Iraq, and North Korea, everything is quite similar from country to country. And the equity crowdfunding, I was saying the equity crowdfunding environment started in 2015. In 2019, it was worth $150 billion. Means that 150 billions of money from retail investors, so people like me who don't have big money behind themselves are invested into startups and small medium companies. Why this? Because if I have 10,000 euro in my bank account today, if I leave the money there, also before the COVID, but after the COVID, maybe something would change. We will see in which way. If I leave the money in the bank, in 1 year, I will have the same amount, maybe less because of taxes, the cost of the banks, or I don't know, 1% of interest. If I go into a stock exchange, I'm not able to understand it. But if I put part of it into a startups, maybe at the end of the year, if I lose the money, nothing changed to me because my life is still the same. But if the startups become, and this is the people idea, the new Amazon, the new Google, the new Facebook, the new Netflix, I will be really rich. This because Uber, if you purchase $5,000 of Uber in 2013, now you have something like 250 million. Obviously, it's 1 on a billion, one company on a billion or maybe more become Uber. But even if you stop a lot more before, it would be good. Obviously, this behavior is not the same as institutional investor, because if I put into something 10 million, I'm happy if in 1 year or in 2 years I have 11 million. But if I put 1,000, I don't mind getting 1,100 in a year. I don't know if I have been able to explain the different way of thinking from big player to a lot of very, very, very small player. And if you have an idea and you need money, you are not able to go to the private investors, institutional, because of all the reasons that Jigar said, maybe you can go to the retail investment and find your way.
Thank you very much, Alan. I think both your idea and Jigar's one can be used, because in the life of a startup there is different phases. Once it's created and once it's growing up for the first phase, and then we don't need a lot of money for that. Just I'd say a few millions at the beginning, and then it can go from phase 1 to phase 2, and after that, then it's going to the second phase, and where you need more money and to grow, and the company will grow up a little bit, and after 4 to 5 years to go to this second phase. And you mentioned also another word, which is it can be financed worldwide, because today the finance are worldwide, and a lot of people, when it comes to energy, are looking for local added value. And what we are seeing in Europe, that most of the startup companies, if they want to raise money, then they need to take the direction of the US. So this is, I'll get back a little bit to Jigar with about one question about it. Before that, we will go to Caroline. Caroline, you are running a startup company which is working on energy prediction. And Starlen mentioned a little bit earlier that we need this. We need really to secure what is coming out to avoid all bad things could happening, because you are running out of electricity. And you faced at the same time regular investor, and you faced what Alan was talking about, crowdfunding. Could you tell us a little bit from a CEO who is living in this hard way to succeed on the technology level and fighting to raise money at the same time, how you can see it, and of course you can introduce your company at the same time?
Okay, so first I think I will introduce the company for you to understand what kind of company I'm managing at the moment. So as Anis just said, I'm the CEO of Steadison, that is a startup that is making solar power forecast. What solar forecast to understand what is the goal of the solar power forecast, I think we have to be in a situation. So suppose you are running a big solar plant. So you have a really big solar plant that is hundreds of megawatt peak. And so that's a solar plant that is doing 3 kilometers by 3 kilometers, for example. You are in a weekly interconnected grid, like for example in Middle East. And so the sun is rising. You are generating power. All is going great. That's great. Now suppose a cloud is coming through the sun. At the moment, you can lose 80% of the generated power in few minutes. So what can you do? There is 3 possibilities. Either you tolerate blackout. That's not the solution that is generally kept. Or you can increase the spinning reserve. So you have generators that run every day, every time. There is generators that are running sometime for nothing. For you to understand that if you are a day where the sky is blue, where there is no cloud, these generators are still running if a cloud is coming. So there is energy losses and CO2 emission for nothing. The other solution you can do is to use energy storage, but you have to have oversized storage, so you have high investment cost and high financial loss. The other possibility is to anticipate the risk by using solar pollution forecasts. So that's what we are doing at Edison. With our solution, you can avoid penalties and you can switch off generators when there is a low risk. We have markets everywhere worldwide because we are looking at weekly interconnected grid, so that either a utility like in Middle East, Africa, Australia, or USA, North Africa, of course, or you have also the island like in the Indian Ocean or the Caribbean island, or you have also the microgrid in Africa, in Australia, and in Asia. So we are everywhere in the world. We have customer with all the energy, the valorization of the energy is made with our solution with all kinds of customers, either TSO, DSO, EPC, or also aggregators, or plant managers, or also auto consumption. And so we are on the valorization of the energy. So everything is going great. We have a double-digit growth since the creation of Steadison. Steadison is 7 years old at the moment. We had a plus 50% this year, and we are raising funds. The problem, of course, is the COVID business, the COVID-19. Sorry for the French in the.
Don't worry. When you said COVID, everybody understands.
Yeah, of course. But in fact, energy is still it's still okay. So I have actually a crowdfunding raise, and also there is business angels that are investors in Steadison. And at the moment, the raise is still going. We have not as many problems as we could have anticipated with the COVID. So I'm not so impacted by the COVID at all.
Okay, good. So there is so the company at this level, you said the growth is going right, and you have people who trust you and who can invest in the company.
Yeah,
this is really nice to hear. Aiki, I have a question from the audience.
Yes.
Just to people who know both of us. We were involved in a startup company who went from Berlin to
Yes.
Sunnyvale.
Cali Solar originally.
Exactly. And I have a question from it's somehow the same way, saying if I have an idea, making a new solar cell with 50% efficiency what should I do to make a startup behind?
Well, I think the problem if today having a technology which promises 50% efficiency is that the crystalline silicon, the very simple mainstream technology, is now in the gigawatt scale. So in order to really compete with this gigantic industry, the arguments have to be very good. So you cannot be as good as you see the silicon industry being today in terms of cost per watt or cost per kilowatt hour, which you can calculate. You need to be at least 50% or so better, you know, so that you can convince anybody to invest serious money in 100 megawatts, 1 gigawatt type of construction. In the past, many of the startup ideas benchmarked themselves to the existing data at this time and neglected that the market does not stand still for 5 years. You know, costs come down each year, prices come down. And in order to convince investors, one has to be able to make a good business plan showing that, you know, you are substantially better in terms of cost per watt as a module or cost per kilowatt hour. And of course, notwithstanding, it has to be a technology which reasonably can be expected to make 20, 30 years of lifetime of modules, little degradation and so on. So the challenge is very huge. My personal bet is in this direction that technologies which are based on a silicon wafer and using a tandem structure like perovskite on silicon. There is no technical reason why a perovskite on silicon cell should not reach 40% efficiency, because perovskites have wider band gaps than silicon. They let the light through so that the silicon cell can function as before, but they can earn all the radiation with much higher band gap, much more efficiently than silicon. So today, the situation is whenever you take a silicon solar cell and you do anything to the surface, because the solar cell is so highly perfected with anti-reflection coating and everything, and if you do something to the surface, the first step is you decrease efficiency. So what I have seen up to now in terms of tandem cells with perovskites on silicon have really not yet achieved the top silicon efficiency, 26.6%, which you can simply reach with a normal silicon cell. So why to make a tandem? A tandem, to be really interesting, has to be clearly above 30%. And then we are talking, you know, because then we can really make the argument, we combine all the industrial experience of silicon technology with this new technology. So I think it is absolutely possible to introduce new technologies, but the problem gets more difficult year by year because the decreasing cost of the silicon, the solar cells, and because of the huge production volume which we have there.
Yeah, thank you very much, Aiki. And I think it's you mentioned few words which really can translate the real life of PV and solar especially. And I can hand it over to Jigar. Aiki was mentioning that we have a huge exponential growth. We have a market when it comes to produce, I would say, the devices or the module or the inverter. Cost is going down and price is going down, and sometimes in an unexpected way. So people, they cannot really predict it. Jigar, from the financial point of view, with all this fluctuation, and when you try to put all this inside a business plan, of course, you will play with it. How tolerance you can really, from the financial point of view, you can really agree with that or you don't agree with that, and what will be the best, I would say, the best way to see it from your point of view, to see that you are confident which kind of element you need to invest in such a plant for PV.
No, it's a good question, and one that I think confuses and confounds people across the world. I'd say that the context of this is that people continue to believe that there is a continuous line between venture capital, government research, venture capital, then commercialization, then deployment and project finance. And in fact, there's no such continuous line, right? That ultimately the owners of PV power plants are people who are risk averse for a living, right? They basically hate risk and they want 20-year power purchase agreements or feed-in tariffs. And they want to know that if anything goes wrong, that someone else will pay, right? So if that the modules fail prematurely, that the warranty will be honored, right? That if an inverter fails, that someone will come within 2 hours and fix it, right? And so from their perspective, they don't care about innovation. They don't care about efficiency. They don't care about anything but making sure that the spreadsheet upon which they made an investment remains relatively constant, right? That every year the same cash flows come in that they were underwriting to, right? On the other side, you have a number of people who are fascinated by technology, right? Many solar power developers are fascinated by technology. So they are constantly going to shows and saying, let me learn about the newest PERC cells or bifacial panels or Perscovites or whatever it is that they're fascinated by, they want to learn more, right? And they want to figure out how to help with this commercialization effort. So they say, well, why don't we take 5% of our solar farm and put in your panels? Or why don't we put in, your inverter next to this other inverter and see how they perform with each other? And it sends the wrong signal to the entrepreneur that in fact their technology has somehow become mainstream because they're now working with First Solar, or they're working with SunPower, they're working with this group or that group. In fact, no signal has been sent except that these people are very kind and they want to try to use new technologies in their next program, right? Remember that we're talking now about 100 gigawatts of solar deployment per year. So if someone gives you an order for 50 kilowatts or 500 kilowatts, it means nothing. It only means that they're nice, kind people, right? And I think that in general, people take the wrong message. And because of that, they get overly exuberant about, what is possible for their technology, because it is quite clear, right, that the solar industry is not 100 gigawatts, but in fact, it is a series of 1,000 niche markets. And in one of those niche markets, for instance, SunPower's 26% efficiency technology might be wonderful. It costs $1 a watt instead of 23 cents a watt, but it might be wonderful because there's this limited space. And so people, want the highest efficiency, right? But, I think people have a hard time from a human nature standpoint to really recognize which niche are they solving, why are their customers buying, and what is the size of that niche? It might be quite small. It's fine. You're selling 100 megawatts a year or 50 megawatts a year. That's a good business. But I think people have dreams of grandeur, and then sometimes they make some big mistakes and then their companies go bankrupt.
Yeah,
but honestly speaking, I think we have right now a very exciting moment in time because of the transition to this new technology, the heterojunction technology, which is a solid silicon technology, but offering higher efficiencies at the same cost as current technology. So this is something we are pursuing right now in Europe. But I think I will not do anything in this direction before securing offtake contracts. This is the first step, to find buyers, and then you can go to the investors. Maybe Jigar, once we are so far, we come back to you.
Yeah, no, I would love to. And I think, but it goes to my niche products, right? Is I think people find it easier to, let's say, get those offtake agreements from one big utility scale project, but it actually might be quite a bit more defensible to do it with residential, for instance.
Oh yeah, but there you don't get the 100 megawatts of offtake agreements from.
That's the challenge. That's right.
Yeah.
Yeah, which is clear. Jigar, once as we have you, then I will add one more question. A lot of people around us, especially in Europe, and then when they have this good idea, let's see if we take the example of Citizen, if she wants to tomorrow for 50 million or to raise up 50 to 100 million, it's much easier when it goes to the US than to stay with such requests in Europe. Even though we are listening that there is hundreds of millions and millions about clean energy finance, but we don't the way how to get this money or to get access to this money seems in Europe is much more difficult than in US. And as I said earlier, and then when Alain mentioned this, that people are looking really to create jobs, to add more, I would say, local added value. So could we on that, wishing that you really propose some solution, that you get closer to us and not ask us to come to US and then everything is fine?
Well, this is the challenge with global trade, right? Ultimately, the US is fantastic at raising money for early stage companies, but it's actually quite poor for the deployment of technologies. Europe is much better at the deployment of technologies. So the technology has to come to the US to get funding, and then it has to go back to Europe to get deployed. The US is always late. I mean, the US is, I would say, 5 to 10 years behind Europe on deployment. Look at offshore wind, look at anaerobic digesters, right? There's 1,800 digesters in Germany and Italy. I think there's maybe like 20 in the United States. So, I think that each region has their sort of specialty. And, I mean, I could fight it if you want me to, but I think in general, it's not an easy thing to do. I think that, what the Europeans have done recently is I think that they have taken quite bold actions at the EU level around climate change. And I think they've made it quite clear that the response to COVID is going to be green in nature. And I think that they would be well served to realize that this is a big problem and that they should solve this problem as well. And that they have many funds in Europe, from AP2 in Sweden to, the Norwegian Sovereign Fund to others, who could seed all of these funds in Europe to make sure that there was money in Europe to provide these early stage things. But there has to become a policy of the EU. It cannot just be something that the EU expects to happen naturally on its own.
Yeah, good. I will get back to Starlin. Starlin, you mentioned a little bit earlier that this industry, especially when it comes to clean technology and maybe solar, it needs sustainability. From your point of view, what will be the ingredient for this? Because at a certain period at the beginning, we have seen a lot of long-term contract, a lot of alliance between big players. And then we thought, yeah, we'll have our big player, and then it's really showing the way, showing the standardization towards sustainability. After that, it disappeared completely. Now we have seen it again just before the period of the COVID. As Jigar mentioned, COVID will be the card which is redistributing everything. So could you please comment on that from your point of view? What is needed to go at least a step a little bit closer to sustainability?
So I think there's two things. When you're looking at hardware in particular, I think it's looking at how do you really achieve positive unit economics, and understanding where your break even is going to be in your business and planning accordingly. When you get into larger scale contracts, I think that you really need to be looking at how do you diversify your business and start thinking about it to some degree, almost like an investor, and how do you manage your risk? Because that's both going to make you more attractive to another investor, but it's also going to fit into your business continuity. And I think when we look at COVID, I think that the real thing that brings up is the need for startups today to start really thinking about their business continuity, because there is going to be a tightening of access to capital. And the companies that do well now are going to be the ones that have a much better chance longer term. And the companies that are already funded, it's very likely that their existing investors, whether debt or equity, have capital in reserve for those purposes.
Okay, thank you. Thank you for this clarification. Ike, I get back to you. It's Jigar mentioned a little bit the model of sun power or for solar for the US market, which means that people, when they have the right model, they can afford more cents per watt peak, and which means more margin. And we are seeing the opposite way of doing things when it comes to Asia, when it comes to China, which means putting a lot of pressure on the raw material, on the equipment maker, yes, or the device to decrease the price. And of course, if you decrease the price and the cost of everything, you decrease the margin. So which model you think that in the future will be more close to a real sustainable industry?
Yeah, I think the big problem which we had in the last, almost in the last decade, at least in the last 8 years or so, is really the issue of overproduction capacity. That means we had many years, and the peak was maybe 2012. You know, we had 60 gigawatt as a world market and 120 gigawatts of world PV production capacity, and therefore prices went through the bottom, and people were selling modules actually below the production cost, you know, because if you have 100 megawatts of module in storage, you don't ask, you know, how much did I pay to produce those? You say, how much money can I get for those? So I think the key driver for this catastrophic price decrease was really overcapacity. Right now, at least before the COVID crisis, I don't know yet what will be the effect of the crisis. Some people say there can be a shortage of modules coming out of China because of the shutdown of the plants. But of course, simultaneously with the shortage of modules is as well a decrease of the demand, because people don't install PV modules in the same speed as before. But before this, we saw the scissor between production capacity and market size, how much was deployed, coming together. And then we would get a much more normal market situation, you know, which still has competitive pressure, but which offers a lot of space, because each off-taker has to balance how much am I willing to pay in contracts which go 2-3 years in the future in comparison to the delivery security, because there can always be the situation that there is a shortage, at least for a limited time. So I expect in the next 5 years that the PV market will be more quiet than today. We will still see decreasing prices because technology development will continue, and cost savings from automation, cost savings from larger factories for all the other materials which you need to come together, take just the solar glass and so on. But it will not be catastrophic. The catastrophic price decrease was not triggered by technology, but by production capacity, by too high production capacity. So as long as the growth of the market goes quickly enough, and honestly speaking, looking at the needs which we have from climate change, we need really the production and the deployment to go from today 120 gigawatt per year to 200, 300 gigawatt per year. Maybe by 2030, we are in the range between 500 and 1,000 gigawatt per year. I just want to say in brackets, all my predictions in the past were always too conservative. So let's see how I am today. But if we do like this, then of course there is indeed a good opportunity for investors to secure quite solid profits by picking up the food chain, you know, not just throwing modules on the market, but really working together with the off-takers. It doesn't need to be an integrated company, but it can be strategic alliances and things like that, so that the off-taker knows what will be the cost of the electricity they produce. Because today solar electricity is at such a competitively low cost that the off-taker can indeed be flexible in terms of the module cost. You know, it's not only a matter of buying the cheapest module, but it is as well a matter of how much does the electricity cost, which comes out of the power plant. And there we are in Southern Europe today with 1.5 cents per kilowatt hour at a level where you don't really need to turn the cost screw too much. You know, you have a good profit margin, and I expect that down the road, the module producers will go as well into the business of deployment and not leave the profits which you get when you deploy those modules, and you don't sell your electricity for 1.5 cents. You can as well sell it good for 2 cents and keep a good margin there. So I think, to be very honest, in the coming years, I think there can be business models with quite interesting profit margins.
Alan, I have one more question for you, and please, if you can skip to 2-minute answer, this will be perfect.
Yeah.
We have the way of doing things, which is normal finance. What, Thomas?
We have still 10 minutes, so.
This is good. Good. So, Alan, we have the normal way of doing things and financing the projects. Jigar give lots of insights. For us, 1,000 gigawatt is huge. For him, it's still divided in different type of market. So do you see it the same way that the finance also could goes with different type of financing? Because we don't need the same finance for a small project or a bigger one when it comes to kilowatt scale, megawatt or hundreds. And are seeing also around us a lot of people are very sensitive to all what is coming. And there is also in some region, if I take France, for example, to win a tender, if you go through crowdfunding, then you have more added bonus to win this tender. So there is some regulation being put in place. So do you see that the finance could goes with a certain aspect of project and markets, or for you it's really a huge wave which coming globally, but it will take time to come over?
No, so let's talking about the equity crowdfunding globally or worldwide. It's growing 4,500% per year. These data are until the COVID, of course, but 4,500% of the money that is increasing from the retail. This because there's a lot of population that still on the ground. If you have an average salary, you earn $1,500 or euro or whatever it is, you are not able to save the money, and you are not able to change your life really. So for the retail investor, a lot of the time it's like a lottery. I like this company, I take the ticket, and maybe it changed my life in 2 years, 5 years. It doesn't work, I do it again with another one, and I keep on taking lottery tickets. I think that it's strange, but so if we talk about I work on the blockchain, so I always go there, but it's true for everything. If we go on the blockchain, and for those that just heard about the blockchain, maybe you heard that it's a scam, because 99.8% of the projects that were built on the blockchain until yesterday were scam or fraudulent, but in just the 0.2 raised the billions and billions. But if you use the blockchain, so the technology, so what's the blockchain? A registered immutable ledger. You write a data into a block and it goes to the next, and the first block, you cannot change it. No one can edit it, and you can just read it. So if you use this model like a public register recognized by a government, you can have your investment, I would say, safe. Even if it's not, it can fail, but nobody can scam you, because they would be responsible and in front of the law. And so the governments overall understood that I would say small money, but altogether are big money, are moving into that way. So they are trying to make the legislations everywhere to regulate the markets. We are still in the early phase of it, but the world is moving in that direction. And so I think there's a lot of chance. I understand that when we talk with the big players talking about energy, they talk about hundreds of giga, etc., etc., etc. But for our startups, maybe starting with I don't know, 10 mega is enough, because they just need to prove that they can do something, and then they can go and raise the big money from the private investors. So I think that now it's just a matter of how to use the instrument that the world is giving you. If I think about 20 years ago, what was I able to do? Just something that was in my local area. Now with the internet, with the blockchain, with the investment that has no barriers, I'm able to invest or raise money from everywhere in the world. And this is a huge fact, because it can open to everybody. because if I live in Milan, if I have an idea and I don't have internet, I can raise money just from people from Milan. Today, if I have an idea, if I am a nice business plan, I can talk to 100,000 of people until I reach my goal. I don't have to have just a meetup with the private investor that maybe say no because they have a competitor already in their portfolio or they have whatever. If I told to Anis, I told to Caroline, I told to Thomas, I told to Jigar, I told to Aiki, I told to Starlin, no, none of them listen to me or are willing to invest in my company, I go to other 10 people and then to others.
Alain, is clear. It's really clear. You are getting this chance of this opening worldwide, and then it will be people looking directly to the project, which gives more chance. Caroline, before we end and we conclude, if you can continue on Alain's thoughts and combining this blockchain, which is an innovation coming from digital world, and you are also from linking, I would say, all the hardware that you are playing with it to the software world, and you are playing with a lot of data. Could you comment how SteadySun is connecting both worlds, solar energy and digital world, in 2 minutes? Because it was difficult to keep an Italian guy talking 2 minutes.
Yeah, of course.
Now it's yours.
In fact, we are using AI for our business, and so we are using all the data we have to be the better possible. I don't know if you want more explanation, because AI is a really big thing.
No, I would say, yeah. It's there's people who are listening to us. They can really go and look at it into details. This is for sure. And I would say also it's having Jigar with us, having Alain, and having you. This is also a way to connect both of you together. And after this, of course. So don't go into the details. That's
also,
really.
you can guys join our next session. Yes. And then after this session, we can meet together, all together. So,
good.
thank you, everybody.
Then maybe I will finish, and then I can hand it to you, Thomas. Yeah. Thank you very much. As I was mentioning at the beginning, we're trying to do really something disruptive at Ines with the help of all the leaders around the Clean Tech Business Club, in order to connect those three words together: innovation, startup, industry, and financial. Very glad to have Jigar with us. Aike, Thomas, Starlen, Caroline, Alain, thank you very much. And now it's time to move to the next session. Thank you. Bye-bye.
Thank you, Anis. Great job.
Maybe before we finish, because actually we should make it at least have 30 minutes, 1 hour longer. But I would like to ask you, because actually we are doing this initiative for all the players around the world, yes? And I noticed that there is a different approach to the startups in different regions, yes? And there is not actually the real link. And actually it's such a pity, yes? Because there is so a lot of knowledge in some regions, there is so a lot of tools in different regions, yes? So what do you think? Just maybe in 2 words, everybody, do you think that this global initiative of connecting all the hubs around the world is good or not? Just yes or not? I would like to ask first our startup entrepreneur ladies, and then the guys. So Starlight.
Caroline.
Yes, I think creating common language between investors and startups is really valuable.
Yeah, that's great. That's great.
Jigar?
I think Jigar left. If I don't see him anymore.
He said goodbye.
Okay.
Yeah.
Alan?
Absolutely yes.
Aike?
I find it really exciting, Tomasz, because we can go on the global scale with that.
Okay, so thank you so much. I hope that you enjoyed this session, and we are now just jumping to the other one. So let me just give you the link if you would like to join also, because we have amazing speakers. 1 second, I will put the direct link already. So this will be the startup mentoring session with another amazing experts. So I put on the chat the link, so everybody can also join without registration. So let's jump on the. And please also, Carolina, Sterling and Alan. Yes, especially
Yeah.
that Alessandro will be speaking.
Yeah.
Okay, so see you in 30
Thank
seconds.
you. Thank you. See you in a few minutes. Bye bye. Bye. Hi, Aiki.